Hey, what's up guys? Welcome back to the channel. Today I will be doing a complete beginner's guide to stock market investing. So make sure you stay tuned till the end of the full video. We are going to be discussing what you should be considering when investing in stocks, and also just looking at some general tips when investing, and also the market risks and other systemic risks that you should be just aware of if you're looking to invest in stocks in 2023. Don't forget to like and subscribe. Make sure you turn on your notifications if you don't want to miss any of the videos here. The links in the description will take you to everything that you need to know. Stay tuned. This is the latest and best in blockchain and digital assets, and we are also covering stocks and a whole lot more, and today is going to be a good one. Let's get into it. Okay, so you might be wondering, why should you even consider investing in the stock market? So today we're going to be touching on some of the main reasons why this might be a good idea for you. So the first one would be just the potential for a long-term growth. So historically, the stock market has actually delivered strong returns over the long term by sort of investing in a diverse range of different stocks. You may be able to achieve higher returns than you would with other types of investment. This is why stocks are quite popular, and also there are the issues of having an opportunity for income with stocks, because many stocks can also pay you dividends, which can then provide you with a source of income, and this can be especially appealing if you're an investor looking to generate a passive income. So there's also something called inflation protection. That is a reason why other people like to invest in stocks. So this means that, the stock market actually does have potential to deliver returns that will outpace inflation, helping you to reduce the purchasing power of your money over time and protecting it from that sort of a risk of your money getting devalued. Also, there is professional management, where many investors actually choose to either invest in mutual funds or ETFs, which are exchange traded funds. These are typically managed by professional fund managers, and the managers actually go on and research, select stocks on behalf of the fund, and also potentially provide a higher level of diversification and expertise than an individual would typically achieve on their own. And also there's just the issue of just the flexibility, and there are many different types of stocks that you can choose from, allowing you as an investor to pretty much tailor your portfolio to your specific goals and also your specific risk tolerance. So we are also going to touch on some of the general tips when it comes to investing in stocks. So don't forget to also check out the links in the description to my books, Tokenized, Trillions, and Blockchain Applied. They deal with real world asset tokenization on the blockchain, including the tokenization of stocks, which is something that I've also talked about in a previous video. But going back to these general tips that you need if you are investing in the stock market. So you need to actually start by setting your investment goals so that they're very clear, so you can determine why you're investing and how much risk you're willing to take. Also be able to create a diversified portfolio, meaning that, don't put all your eggs in one basket. Consider investing in a variety of different stocks, bonds, and other assets to spread and sort of maximize your potential for returns as well. And also make sure you are on top of getting financial advice. You also be able to just do your own research and monitor those investments, making sure that you're staying the course and then not getting caught up with the short-term fluctuations of markets, and just being patient and sticking to a long-term game. But also consider the fees that you're charged when you're investing in stock markets. Like I said, there are always risks associated with any of these things. So there are also risks that are inherent when you're looking at stock market investing. Okay, so investing in the stock market actually does carry some risks. It's important that you are aware of those risks. So I'm going to just give them out as a little breakdown so you can understand some of these risks. They're endless risks, some that are maybe applicable to you and not necessarily to me or somebody else. So you always just need to understand your own personal situation. So there are what we call market risks, where the value of your investments can go down due to changes in the stock market, like we've seen this past year. The trend has been downwards, with a lot of stocks losing value. And there's also like company specific risks. If you look at maybe there's a shift in leadership, what's going on with Twitter and Tesla, where, you know, if the brand is tied to an individual, and if the market starts to see that individual as not necessarily being focused on one thing, or in the case of Tesla, for example, lately, you can also see that there can be an impact on price in that way. But there can be different company specific risks that can be tied to financial performance or just trends within that industry. But there are also what we call interest rate risks. Of course, these are changes in the interest rate, which can actually have a dent in the value of your investments. For example, if interest rates rise, if they've typically been doing so over the last year, we've seen the value of bonds decline, and we've also seen risk assets getting affected, in more than just risk assets as well. We've seen even other assets such as real estate really taking a hit. And there's always this inflation risk, and more so than ever, you know, inflation is really apparent, and it's really one of those single factors that's really eroding the purchasing power of people over time. If the returns are poor on your actual investments, you know, and they don't keep up with the pace of inflation, like we said earlier on, you could end up with a much less purchasing power in the future. So that could be whether it's in stocks or in cryptocurrencies. That's why it's always important to invest only what you're willing to risk or you're prepared to lose, because then that doesn't actually affect much of your general cash flow for taking care of your day-to-day expenses, etc. There are always liquidity risks, of course. If you don't, or if you need to sell your investments quickly and then the market is down and you don't have that much liquidity, you end up being forced to sell your holdings at a much lower price, which tends to happen when there's a bear market or a severe or protracted recession. So it's important, like I said, understand all the risks anytime you get involved in any kind of investing. As far as being in the stock market, these are some of the things that you just need to be aware of if you're a beginner, or even if you're a professional or a long-term trader, somebody who's been in the stocks or crypto equities markets or any other sort of financial markets, doing trading and investing. And it's always just good to you to have that refresher at the beginning of the year. This is for 2023, a beginner's guide to stock market investing. Check out links in the description, like I said, to my books, Tokenized Trillions, Blockchain Applied, and also check out our Discord server and our Telegram channel. And also make sure, if you want to do peer-to-peer marketing, hit us up at proudlyassociated.com. Check out navigate-digital.com if you're interested in doing business online. If you want free tools and free resources, you can also head on to our main site, decentralized.news. We've got a full resources page with all the resources and tools that you'll need to navigate your way within this market. And also make sure you give us a like and a subscribe, share our content. See you in the next one. Peace and love. Prosperous 2023.